You know that feeling when you open an options chain and you're just hit with this wall of numbers? Delta, Theta, Vega. It can be kind of overwhelming, right? Well, today, we're going to decode that entire dashboard. Let's jump in, because these aren't just random numbers. Nope. They are the secret language of options trading.
And I just love this quote because it is so true. The Greeks are not here to bog you down with some crazy complex math. You got to think of them as a cheat code, one that gives you a massive edge. It helps you see how your options are going to behave before they even make a move.
So, here's our game plan for today. First, we'll talk about why the Greeks are this cheat code. Then, we're going to break down the big three. You've got delta, which is your price sensitivity gauge, theta, that ticking clock you just can't ignore, and Vega, the volatility factor. And then we'll put it all together so you can look at your own trading dashboard and know exactly what you're seeing.
So what exactly is this cheat code?
Well, it's the ability to see all the different forces acting on your options price. So instead of just betting on a stock going up or down, the Greeks tell you how your options price will react to changes in the stock price, to the simple passage of time, and to big shifts in market mood. It's all about anticipating, not just reacting.
And really, this slide says it all. This is the big shift that happens when you finally get the Greeks. Without them, you're pretty much flying blind, and that's why so many beginners get wiped out. But with them, you go from just guessing to making smart, calculated decisions about your risk and your potential reward.
All right, first up to bat is delta. And honestly, the best way to think about delta is to picture it as your options speedometer. It tells you exactly how fast and in what direction your options price is going to move when the stock itself makes a move.
So the textbook definition is that delta measures the expected price change for every $1 move in the stock. It's really that simple, a direct relationship. If you know an options delta, you can pretty much instantly estimate how a move in the stock is going to affect your bottom line.
Okay, let's make this super real with an example. Imagine you've got a call option on Apple, and it has a delta of 0.5, okay? So if Apple's stock price goes up by $1, your options price is going to increase by about 50 cents. If the stock jumps $2, your option goes up by a full dollar. See? It's your speedometer.
Now, here's something that is absolutely crucial to remember. Delta's direction really matters. Call options, which are your bets that a stock will go up, they have a positive delta. But put options, the bets that a stock will fall, they have a negative delta. This is fundamental stuff. It confirms exactly which way you need the stock to move to make money.
Okay, so while delta is all about tracking price moves, our next Greek tracks something none of us can escape: time. So let me introduce you to theta, aka the ticking clock. Every single option has an expiration date, and theta, well, theta represents that slow, steady drain on your option's value. As that date gets closer and closer, it's the cost of time.
I gotta say, I absolutely love this analogy. Think of your option like a carton of milk, right? When it's fresh, lots of time till it expires, it's valuable. But every single day that goes by, it gets a little bit closer to that expiration date, and it loses a little bit of value, until poof, it's worthless. And that is exactly what theta, or time decay, measures. It tells you how much value your option is going to lose every single day just from time passing. For option buyers, you gotta know, theta is the enemy. But for option sellers, oh, it's their best friend.
And this chart illustrates the most important thing you need to know about time decay. It is not a straight line, not at all. When an option has plenty of time, it loses value really slowly. But as you get into that final month or that final week, that decay just accelerates like crazy. That ticking clock starts ticking much faster.
Okay, our final Greek for today is Vega. And Vega is all about volatility. The market's mood swings. It measures just how sensitive your options price is to changes in what the market thinks is going to happen, what we call implied volatility.
So what Vega tells you is how much your options price will change for every 1% change in that implied volatility. And implied volatility is just the market's best guess of how much a stock is going to move around in the future. So when the market gets nervous and expects big swings, volatility shoots up, and Vega makes options more expensive. When everything's calm, volatility drops, and Vega makes them cheaper.
And this, right here, creates a massive opportunity. High volatility means you get these really expensive options, which is fantastic if you're a seller collecting that juicy premium. On the flip side, low volatility means cheap options, which is a great time for buyers to get in without paying a fortune. Understanding Vega lets you literally capitalize on the market's fear and greed.
Okay, so we've looked at all the individual gauges on the dashboard. Now it's time to put it all together and learn how to read the whole thing at a single glance.
This table right here, this is your ultimate cheat sheet. So delta is your speedometer, telling you how your option will react when the stock price moves. Theta, that's your ticking clock, showing you how much value time is eating away each day. And Vega, that's your volatility gauge, helping you profit from those shifts in market mood. Put them all together, and you have a complete picture of everything going on in your trade.
So there you have it. The Greeks, they're not scary at all. They're just the instruments on your trading dashboard, and they're there to guide your decisions. They're what takes you from guessing to knowing. So the only real question left is, now that you can read the dashboard, how are you going to navigate your next trade?